What's up everyone, it's Caddy with Money Investing. Don't mind the actual title or the thumbnail of this video, it still needs to get updated, so obviously it's not market open. But 10 stocks to actually watch for tomorrow, and I will be taking requests from you guys to go over some of the stocks that we can watch for next week. And again, do some technical analysis on those. If you guys can hear me, if you guys can see me, just let me know in the live chat. We should be all set. And again, thank you so much for being here. I know it's a little past 8:30 Eastern. So I really do appreciate your guys' support. So good evening, good afternoon, wherever you guys are watching from. So thank you so much for joining in. The futures market is open right now. So we have the S&P 500 futures up over 18 basis points. And this right here is the NASDAQ futures up over 23. And the Dow futures are also up over 13 basis points. So we are pretty much flat. So it's not like we're seeing a big rebound yet going into tomorrow. But so far, we are pretty much flat at the moment. So Nelson, 2 days to buy the course. Will I still get the early bird? Nelson, that's a great question. We do have that discount for a limited number of people. I think it's like the first 50 people get that discount. So if you are going to be joining, you just want to make sure that you're in that first 50 people, and then that rate is gone, in my opinion, forever, and then the pricing will go up as new course content will be released, because this is kind of like an ongoing sort of course. I will be releasing more and more videos and more lectures several years out. Like, this is forever lifetime access that you're getting. So once you're in, you're gonna get access to all new lectures and new videos on the go, and then that's it. So that's about it. But let me just quickly go over these. So Tesla delivered over 241,000 vehicles. So we were watching this very closely. I put out a video yesterday. So topping expectations is a record number for the company. So you'll notice that Tesla delivered over 241,300 electric vehicles during the third quarter of 2021, and the company reported Saturday quarter's deliveries topped expectations, and analysts were expecting 220,900 electric vehicles during that time, and the company produced 237,823 cars in that same period ending September 30th, 2021. So big number for Tesla, really watching that $780 as that next level. So Gabrielle, I'm glad you mentioned Foot Locker. I've been watching that stock very closely. It's been coming down, and this is one of the stocks that I will most likely share in our trade ideas over at our Discord, because that stock with a really strong yield trades at super undervalued level. I was watching it over the weekend, so definitely considering it. So I will go over that in just a second. But $750 is going to be that next support level for Tesla, and $780 is going to be that resistance to keep in mind. But strong delivery numbers from Tesla. To what extent is that already priced in? We'll find out tomorrow. But 241,000 is a great delivery report from the company. So we've got Q4 2021 will likely be a will likely record a higher than average return. However, investors will need to hang on tight during the typical tumultuous ride in October, which saw 36% higher volatility when compared with the average for the other 11 months. Notes CFRA Chief Investment Strategist Sam Stovall. And one of the first hurdles markets face in new quarters is Friday's close-watched employment report. So we talked about it in our yesterday's video where we mentioned how that employment report is going to be the most important employment report this entire year. And the reason why that is because the Fed's going to be watching that. They need a decent report in order to start tapering, right? That's going to spur the Federal Reserve's decision on when to taper its bond buying program, and economists expect about 475,000 jobs were added in September. But I would definitely take this number with a grain of salt, because economists have been time and time again wrong with that estimate. They've been super aggressive, super conservative, and the numbers have always been kind of the opposite. So I'd say this time around they're kind of giving us a mid guidance. It's not like they're super aggressive or conservative. 475,000 in a post-pandemic world is very reasonable. So I wouldn't be surprised to get us very in line. I think this might be the one time that economists may be right about that 475,000 jobs. So I'm expecting anywhere between 300 and 600,000 jobs. That's kind of the range that I wouldn't be surprised to see the jobs number on Friday. And if that numbers do get hit, then the Federal Reserve could begin tapering as early as November, right? We've talked about it in the past. And market is unprepared for inflation fallout. Wharton's Jeremy Siegel warns. This was also a headline that kind of caught my attention. Definitely wanted to give it a read. So Wall Street may be on the verge of that's a long word. Of an uncharacteristically painful quarter. Wharton finance professor Jeremy Siegel, who's been known for his positive market forecast, is sounding the alarm on the market's ability to cope with inflation. And we're headed for some trouble ahead on Friday, and inflation in general is going to be a much bigger problem than Fed believes. There's going to be pressure on the Fed to accelerate its taper process. I do not believe that the market is prepared for an accelerated taper. So we already know it's going to be roughly from November till June of 2022. So that's November, December, and then you add on 6 more months. That's 8 months worth of tapering. Now, if inflation gets too much out of hand, or according to Jeremy Siegel, there is going to be some accelerated taper, which could be a problem for the markets. His cautious shift is a clear departure from his bullishness in early January. And according to Siegel, the biggest threat facing Wall Street is Federal Reserve Chair Jerome Powell stepping away from his easy money policies much sooner than expected due to surging inflation. We all know that a lot of the liquidity of the equity market, that's actually a new word I learned today. Equity market is related to the liquidity that the Fed has provided. If that's going to be taken away faster, that also means that interest rate hikes are going to occur sooner. Both of those things are not positive for the equity market. So that's that, and this is also very, very interesting. So he suggests that tech-heavy Nasdaq, which is 5% from its record highs, is set up for sharp losses. So Siegel is particularly concerned about the impact on growth stocks, particularly technology, and there will be a challenge for the long duration stocks. The tilt will be towards the value stocks, and he sees the backdrop boding well for companies benefiting from rising rates, have pricing power, and deliver dividends. And yield is scarce, and you don't want to lock yourself into the long-term government bonds, which I think are going to suffer quite dramatically over the next 6 months. And they may have their day in the sun finally. If you have dividend, firms can raise their prices, and historically dividends are inflation protected. They're not as stable, of course, as government bond, but they have inflation protection and a positive yield as well. So I don't think it's a bubble, he says. Investors have foreseen some of this inflation. Mortgage rates are going to have to rise an awful lot more to really. And so I think real estate REITs are still good assets to own. So we've been buying REIT ourselves. We've been buying ticker symbol O, which is the Realty Income Corporation. But all in all, I mean, he has one opinion. Of course, there's several analysts and economists that have different view on the markets. But this is just one of the opinions that I wanted to kind of share with you and kind of have a really good discussion on what you guys think, about what he has to say, right? Basically seeing a tilt towards value away from technology, which theoretically all sounds well and good. I mean, if you look at the theory of how the markets are going to do, it makes sense why he has this view, right? Because tapering leads to lower demand for bonds, which leads to prices coming down, which leads to yields going higher. And if we see an accelerated taper, if it doesn't take 8 months, maybe it takes 6 months or 4 months for tapering to complete, then they're going to start raising rates. That's obviously going to affect some of the technology names and growth stocks. And as a result, he thinks that value is going to be more of a return, sort of is going to generate a higher alpha than technology and growth. So that's that. And then of course, oil and gas prices are fueling inflation right now. That's thank you so much for bringing that up, Dudley. I wanted to go over that as well. I completely forgot about that. So oil studies ahead of OPEC plus producers meeting on supply policy. So oil was steady ahead of an OPEC plus meeting on Monday to discuss production policy amid a rapidly tightening market, and futures in New York traded near $76 a barrel after capping a 6th weekly gain on Friday. So energy, of course, has been a great leader over the last several weeks and months, and it's the only sector that's actually handsomely outperformed all the other sectors, right? So Ranjit, when does tapering start? So tapering is going to be very important with the Friday's employment report. So October 8th, when that employment report comes out, then we can see, or the market is going to try to gauge whether this report is decent or not, because that's what the Fed said. And Jerome Powell said, I think the test has been it's been all but met, right? So they need just one knockout, reasonable employment report to begin tapering, and that's going to probably be in the November meeting. So like the first couple of weeks of November, when we have the next FOMC meeting, we can expect an announcement, and that should go till the middle of next year, so about 8 months of tapering. But we'll see if that. They also mentioned they're going to speed it up or slow it down depending on the pace of the economy and how well we're recovering, and the yields and all those different things as well. So we'll see what happens. But the alliance led by Saudi Arabia and Russia may have to consider raising output in November by more than its planned 400,000 barrels a day, and OPEC's own modeling is showing demand will outstrip supply over the next 2 months. OPEC plus production policy will be the main factor influencing oil prices over the coming months, according to VTOL Group. So that is going to be very, very important, right? Because inflation is closely tied with oil. I think oil is the biggest driver for inflation, because as oil prices go up, prices for everything else has to go up to accommodate for freight, shipping, logistics, everything that's being traveled to and from manufacturing, raw materials, finished goods, everything is being traveled, whether it's shipping, whether it's air freight, whether it's actual physically taking it to the customers' homes. everything is tied to oil prices. Higher oil prices, higher gas prices, obviously going to raise inflation expectations as well. So we'll keep a close eye on what the production looks like from OPEC plus. All right, so that's that. Let's just go over some questions here, and I'll also break down some of the stocks for you guys. I'll try to break down as many as possible, so keep them coming. We'll quickly, spend about a minute, 2 minutes on those, and then just move on to the next one, because this is time for you guys. Again, I want to dedicate as much time to all of your stocks as possible and go over them, in a lot of detail. So. How does tapering impact the financial sector? It's actually going to benefit the financial sector. That's why I'm actually focusing on positioning myself more towards financial banking stocks as well, on top of what we already have with technology and growth. And we've been kind of nibbling on some of the value plays as well, like Walgreens and Vertex and, Southwest, that's a recovery play. Then we got Realty Income Corp, that's ticker symbol O. So those are like some of the value plays that will provide some diversification, but I am definitely considering a financial ETF like a banking stock as well. Could be JP Morgan, could be Bank of America, could be an entire ETF. So still doing that analysis, and we'll be posting an alert over at our Discord. All right, so SoFi, perfect higher high and higher low pattern. So you'll notice that this right here is an ascending pattern, meaning that we are still pushing higher. So this is actually good, right? So earlier we were making lower highs and lower lows, and now we're starting to push higher in this higher high and higher low pattern. So this is a sign of progress. This is a sign of strength from SoFi. And next resistance to watch is going to be this level right here, sitting roughly at 1665 to 1670 levels. If you do see a breakout, then this right here, the next resistance to watch is going to be sitting roughly at 1775. Those right there are going to be two resistance levels to watch, at least going into next week. I do expect for a full breakout from SoFi back up to $19, $20 a share. We had a lot of buyers step in right here on September 30th, and then again on October 1st. So definitely a lot of momentum and buying pressure for SoFi. So keep a close eye at those next two resistance levels, and we're perfectly validating this higher low or this ascending support kind of inside this uptrending channel for the company. Talking about NEO, so NEO is down about 70 basis points on Friday. So it had a really strong delivery numbers as well, over 10,000 vehicles delivered in September. So overall, just a very, very strong number. And that makes sense with everything that the company has been saying, right? I think NEO has been very transparent in providing us updates on what's going on. So earlier, this year they had invoicing issues, which resulted in a lower drop in the delivery numbers. This past month they had supply chain issues, which resulted in NEO not doing as well with the delivery numbers. And they said that they have plenty of orders and got plenty of demand. And in September, they're expecting north of 9,000, 10,000 vehicles, which they actually delivered. So very pleased with that. That just goes to show how confident the company is. And there are some issues that are very short-term issues, in my opinion, with supply chain, with invoicing. All the other things that are causing NEO to not do well are temporary in nature, in my opinion. So we'll keep a close eye at $34. That right there is going to be that support. We've just been consolidating sideways for the most part and getting rejected at this lower high. So that right there is going to be the descending or kind of like a downtrending channel where there's a lot of weakness and NEO continues to make these lower highs and lower lows. So keep a close eye at $34. Resistance is going to stay put at $39 to $38 a share right here, kind of aligned with that 50 EMA and inside this red rectangle as well. So talking about Foot Locker. So Foot Locker, definitely watching very closely. It's testing its support. So that's why it makes it so interesting here, because 44.75 I believe has previously also acted as a strong support or a resistance level for Foot Locker. So you'll notice that in the past we have perfectly validated that support at 44.75, previous resistance, and this stock is just really sold off, down about 32-33%. I mean, the valuation of this company is just so cheap right now. If you come down to statistics, only 4.7 times earnings with 55.55 less than 1 time sales and only 5 times cash flow. I mean, overall, this represents a significant opportunity. I mean, gross margins at 33%, which is not the best, but look at this. Another thing that I want to mention is that I've actually been reading this book called That Little Book That Beats the Market. Of course, it's a very, very popular book. It's a very short book, and it's only got one simple formula to actually identify stocks. Companies that have a high earnings yield and companies that have a high return on invested capital, or basically return on capital is what you're looking at. So in terms of efficiency ratios, personally, I like to look at return on assets, return on equity as well. But return on invested capital is how well the company is using its capital deployment, right? How well the company is generating that return on the capital that they have. So return on invested capital, in my opinion, over 18% is good. Anything over 10% is really good for this company, which is Foot Locker. George says, avoid Pinterest. They lost customers. Who did they lose? Which customer did they lose? Just let me know in the live chat. Would definitely love to take a look at it. But Foot Locker, it's got a decent yield of just over 2.5% here, 2.5%. Market cap at just over 4.8 billion. So definitely represents a very, very attractive valuation at a low risk, high reward potential. If you do get a retest back up to 67, 68, that's a nice 44% rally here. So Foot Locker is going to be on my watch list for next week. This is one of the stocks that is undervalued right now. There's no doubt about that. And definitely represents plenty of upside here, just given how much it's sold off. So Foot Locker is going to be one of the stocks I'm watching very closely. What would you wait for before investing in Baba? It's kind of hard, man. It really is. I mean, Alibaba now down to 142. I kind of readjusted this price, 143.34. We hit another 52-week low for the company. It's just gone down to a point where it's just, I don't know. I mean, it's a tough call for me because, like I said, every time we go up, every time there's a little ray of hope, we just continue to kind of come down. So, Steven, are you buying Chinese stocks? I am not. The only Chinese stock I have right now is NIO. That's the only company that I have that's kind of like a Chinese stock. But yes, definitely a bullish divergence. Can't argue there. So, Jay, you're absolutely on point. The RSI making higher lows here, with the price continuing to come down, making lower lows. So this is perhaps the first time I'm actually seeing a proper bullish divergence. So I mean, next week, if we do get a retest of 130s or like 140, low 140s to like high 130s, I would not be surprised to actually take a position here because of how low it's just come down. I mean, we've just continued to broke down below that support level. So we'll watch this. It's going to be like, a very tough decision because every time we go up, it just continues to come back down. So, that's been the pattern for Alibaba. Regardless, we can't talk about the fundamentals or the technicals. It's just like a whole different conversation that needs to be had with Alibaba because both of those are oversold and undervalued. The risk is something to consider. All right, let's take a look at ChargePoint. So ChargePoint, $19 is going to be that support. So on Friday, we come down to $19.31. So we are off by 1 cent of that support. So 1930 is on the chart as a support. And this right here is going to be an area of demand, and we perfectly tagged that level. The buyers really stepped in to push us higher. So it's definitely, from a technical standpoint, it's coming to a more attractive level, just like a low risk, high reward potential. But be mindful of the valuation as well, right? Because valuations over the long term matter. And if you're buying a company that's very, very expensive, it's trading already at a significant premium to its cash flows, to its earnings, to its revenue, then there's going to be plenty of downside, and the margin for risk is going to be that much higher. So technically, it makes sense at 1930. That's a very, very strong support, and we just closed 1 cent shy of that support. Technically, like I said, there is strong support here, so I would definitely watch this going into next week. But fundamentally speaking, again, price of sales for the company is still high. Now I know ChargePoint. In my last subscriber special video, people were debating about ChargePoint and how it's not overvalued, it's not trading at a significant price of sales, but it is, right? We've just gotten used to higher multiples, and we've just gotten used to higher valuations. That doesn't justify, specific companies and why they're trading where they're trading, right? If it's overvalued, it's overvalued. There's no debate about that. If it's trading at 30, 40 times sales, it's completely up to you. If you're willing to take that risk, that's normal. But to me, I like to be very conservative. I like to build a solid margin of risk and really build out a margin of safety before kind of buying some of these companies. So keeping a close eye, 1930 support, 2254, that resistance is going to stay also aligned with that 50 EMA and the lower highs and lower lows right there. So that would be very important for ChargePoint right now. All right, let's take a look at Take-Two Interactive. So this is a stock that we talked about in the 3 stocks that I'm buying more of. So I don't quite have a full position yet in this. I will be buying more shares going into next week. Last Friday we got a perfect retest of $151 a share. So this right here, was a perfect retest of that support before pushing higher. So that next resistance to keep in mind is at 164. One of the big things that with Take-Two Interactive that I feel like it's not getting a lot of attention is Metaverse, right? Metaverse is going to be huge for the company, and they've got open world game concept with GTA 6 which in my opinion, when you combine those two, is going to be explosive for when and if it comes out. In my opinion, it will eventually. It's just going to take some time, and I do have a multi-year time horizon on this. It's not like I need to make this happen like in the next year or 2 years. I'm more than happy to wait for the next 5 years, but I do believe Take-Two Interactive is going to be a very solid company over the long term as they have continued to kind of increase those revenue growth, keeping share dilution down, keeping a very solid balance sheet, got plenty of titles in the pipeline. So overall, just in my opinion, it's got a lot of potential to the upside here. So 151 is going to be that next support level. So okay, due to supply chain shortages, I'm looking to purchase retail stocks to come back in the fall. Yes, so there's going to be a lot of retail stocks, and again, you have to understand the supply chain issues is only temporary in nature. Wall Street likes to put focus on that because they don't like to own companies that have short-term weakness. They want to own companies that are for that year. That's the theme for that year, because they're trying to beat the market. They want to make their year-to-date returns look really good so that they can attract more clients, they can attract more money to the fund. We have the liberty to have a multi-year horizon, have the liberty to actually forecast 5 years, 7 years out, because we're not competing with the market, right? Because we can have a longer term outlook as opposed to just focusing on supply chain, just focusing on these short-term issues, and then just bailing on some of the great companies that will do really well in the future. So 164 is that next resistance, 151 support. Just watching that breakout over that 50 EMA. If we do see a little bit of a push higher, then we could see a retest of that resistance once again. But that is going to be very important for Take-Two Interactive. All right, so yes, so Take-Two, I won't say they will never release GTA 6. I know, I mean, in my opinion, they will eventually, but they do make a lot of money on GTA 5, you're right. So online games and everything that they kind of, upgrade that game, they're still making plenty of money on that game. But GTA 6, in my opinion, will eventually come out because, it's one of the biggest franchises in the world for gaming, and I don't expect the company to not release a new version of that game. And in my opinion, they are working on it. It's just that we haven't received an official announcement yet. So we'll be closely watching when that game comes out because that's going to be huge for the company. All right, let's talk about Teledoc. So TDoc definitely breaking down here. On Friday, it was down a little bit over 8 basis points. So Yusuf, finally, I'm going over Teledoc, man. Relax. So this right here, the revenues have obviously been growing up consistently, but the company, trades at 12 times sales. Doesn't have an earnings yet. So price to earnings multiple is not there, but the balance sheet I believe is very, very good as well for the company. So they've got a little bit of debt, just over 1.7 billion, 1.2 billion actually, and $786 million in cash. So decent balance sheet, I would say. But the valuations come down, and even now, so Teledoc now it's starting at 12 times sales. So for us to imagine where it was before this 58% drop, was even more, right? 25, 30 times sales. So that was significantly rich for the company. So 129, unfortunately, is going to be that resistance since we are breaking down here. We were just consolidating sideways here alongside that support, and then we finally got that breakdown. So next support level to watch for Teledoc is going to be sitting roughly at that $107 a share. So you'll notice that we perfectly kind of validated that support here once, pushed higher, pulled back. 107 was that support again before breaking out to the upside. So keep a close eye at $107 a share. That right there is going to be that next level to watch for the company. So 107. And I personally have no desire of actually owning Teledoc fundamentally for the long term unless the earnings are significantly better. They're great, and of course the valuation is at an undervalued level. You also have to understand with valuations, you want to buy something that's undervalued. You're underpaying for that stock. If you're paying fair value, there's not plenty of upside, right? There's not a lot of room to grow. Where's your margin of profit built in if you're buying at fair value, right? It's the same concept as as simple as let's say that you're buying a car, right? And a car is worth or valued at $20,000 and you're paying $20,000, right? You're buying at fair value. You want to buy something that's lower than actual fair value or its actual intrinsic value. So for that car, $20,000, you may want to pay $15,000 or $17,000 or $18,000, so you can build that margin of profit. And as a result, when the prices go up, and sometimes they'll go crazy, they'll go up even higher than fair value, that's where your margin of profit comes into play. So that's the key with valuations, is that you have to understand how much room for profit there is with very little margin of risk. So Sightless Wisdom, thank you so much for that. Let's just go over Silvergate Capital. Never really looked into this company, I believe. What is the ticker symbol here for Silvergate Capital? Yeah, I think I typed it right? Silvergate Capital. Is that a stock, or is that a REIT, or what are we looking at here? SI, okay. Right there. Okay, Silvergate Capital Corporation. Okay, nice. So let's see. So market cap is just under 3.4 billion. Very, very strong, stable revenues with profitable company, 26% margin. So that's really good. Trades at 52 times earnings, and 24 times sales. Not the ratios that I want to see, but let's just take a look at the technicals here. So it's been kind of forming this higher high and higher low pattern. So just making this consolidation pattern here. It kind of formed a triple top here. So there was a triple top before we broke it down eventually. So we were getting rejected at that $181, $182 level consistently before finally breaking to the downside, and just selling off all the way down to $79, $78 a share. So that right there was a drop of 50% or more, 54%. So this right here is going to be a strong support for the company. So let me just put that in. So yeah, support sitting roughly at $81 to $82 a share, but right now we are starting to see a little bit of a breakout here from this resistance. That's going to be the red line, close to $116 a share. So keep a close eye at this next higher high. That's going to be sitting roughly at this $132, $133 level. So right there is going to be that next resistance. And ideally what I would like to see is for this to come back down to retest that support before pushing higher. So, come back down, retest, revalidate that previous resistance, previous support, and then make the next leg up higher, back up to 181, 182. That's only the technical sort of analysis, but fundamentally, again, like I said, it's trading at a rich valuation right now. Do you think looking at SPY futures on Sunday is good to think or get an idea of how the Monday is going to look like? It depends on when you look at it. It depends on what time you look at it. If you look at it right at the open at 6 p.m. on Sunday night, maybe it's not going to be a great estimate. If you look at it 1 in the morning or 2 in the morning, then yes, it'll be a lot better, because the closer we get to market open, the better it's going to get, because you'll notice that we opened green and we just almost turned flat here, right? We are pretty much, the Nasdaq futures are just over 5 basis points. The S&P, the Dow just turned red. So it really depends when you look at it. The later in the day that you look at it, the better estimate it's going to give you, because it's closer to market open, right? And of course, 3:59 a.m. Eastern is going to be the best time to look at it, because it's 1 minute away from market open, from pre-market. So 9:25 is the most accurate. Yeah, 5 minutes before market open, you can get a good idea on how the markets are looking. All right, Signature Bank. Let's take a look. So SBNY. This is also a bank that's been breaking out. Wow, so up over 5% here. Definitely on the move. 78 basis point yield, $16 billion market cap, strong revenue growth, strong margin growth as well. Valuation is reasonable. So this one, there's definitely potential here. So 21 times earnings and 7 times sales and 9 times cash flow, almost 10 times cash flow is very good for the company. I'm actually not going to go over the balance sheet, because banks have a different way of analyzing their balance sheets. But this right here, strong move from $73, up to 251% gain here. But for the most part, we were just consolidating. It's kind of like a weird pattern. But this right here, just higher highs and higher lows. And right now we're starting to peak above that level, right, with a nice breakout to the upside. So support level, I would keep a close eye at this level right here for support for the Signature Bank. That's going to be aligned with that 50 EMA at $259, $260 a share, also aligned with this previous resistance where we have gone rejected at several times. So you'll notice time and time again, once here, twice, 3 times, 4 times, we've just been getting rejected at that level, and right now we're seeing a nice breakout. So keep it close at $259, $260 as that next sort of support level to watch for the company if you do see a retest. But of course, it's hitting a new all-time high. I believe it's hitting a new 52-week high, but also a new all-time high for the company. So strong momentum here over the last several weeks since November 2020. It's just been on a nice 300% rally. All right, so let's see. Would this be a bull flag? That's a great question. I mean, bull flags are more like inclining to the downside here. So usually you see bull flags kind of tilted slightly towards the down here. So we see like a rally prior to this. Bull flags are more like, they tilt to the downside, but this is more to the upside here. So wouldn't be like a perfect bull flag, but definitely, a lot of consolidation between that range before pushing higher. All right, so Jackie, CLF, when do you sleep? I sleep at night. I get nice 7 to 8 hours, and I do take that very seriously because sleep is very important. Some things that are very important, of course, apart from the stock market, is sleeping, being hydrated, and of course meditating. That's also very important. I don't know how many of you guys do that, but definitely check out Waking Up. It's from Sam Harris. He's a great speaker, all about mindfulness. Been listening to him for a long time. So CLF, Cleveland Cliffs, support at roughly at $19. That's going to be aligned with that, and exercise as well. That's right, workout and exercise. Yes, very important. Support right here at the 200 SMA at roughly $19 a share. Previous resistance for the company, so we'll definitely watch that. RSI's come down, the MACD's also come down, so a little bit oversold here. But the valuation, 13 times earnings, less than 1 time sales, is very, very good for the company. So, Rita, no, it wasn't a planned live stream. I mean, we've just been doing Sunday night live streams on like top 10 stocks to watch anyway. So, new lifestyle course? No, like far from that. I'm still obviously working on a lot of different things when it comes to lifestyle changes. But yeah, I mean, those are some things that I definitely follow on a regular basis. But CLF support at $19. Resistance is going to stay put at close to this level, at close to $24, $25 a share. Richard, the eye is a lot better. I think it was just the humidity and like the dryness in the weather as we change it here in India, as we go from like the summer to like winter months. I think it was just the dryness that basically resulted in just a lot of dryness. So I basically have been using a lot of moisturizer and stuff. But for the most part, CLF, $19 support, $24, $25 resistance here for the company. Let's take a look at Pubmatic. Pubmatic is a company that I'm definitely watching very closely. This stock continues to sell out. The short interest remains high for the company. So power is good. Power has been very good. We haven't seen any outages, thankfully. Just watch. I said it now, and now we're gonna see some power outages. Hopefully not, but it's been well. And the local time is just a little bit over 6:30 a.m. So 6 in the morning, 6:30 in the morning. So Pubmatic, the short interest is really high for this company, so it remains high. That's why we've seen a lot of selling pressure. We did get a little bit of an inverse head and shoulders here. So left shoulder, head, and a right shoulder, and then we saw that breakout back up to $44, but then we got rejected once again. We pushed up, got rejected once again. We pushed up, got rejected. I mean, this chart is very easy to read because you've got a nice descending triangle, and it's testing support at $25, $22.50, like right around that level. So watch those two support levels. It's a profitable company with nice growing revenues. I've been kind of listening in on the CEO and what he has to say about advertising and content and developers and publishers and how they actually benefit from the Pubmatic ecosystem and the flywheel that they have. So definitely considering this one as well. I believe it still trades at a reasonable valuation, over 50 times earnings. It doesn't show up here on TradingView, but I was looking at it on Yahoo Finance because of the forward earnings, EPS, considering that it's trading at just over 50 times earnings, well actually PE, forward price earnings at 50. So definitely at a rich valuation, but considering it at roughly at that support level, just from a technical standpoint. And what we really need to see is a strong breakout over this 50 EMA at $30, and then also above that $35, $36 level for us to really see a rally back up to $40, $45, and then we can start making some higher highs and higher lows for this company. So this is definitely on the watch. And we'll be doing some additional analysis. The earnings are coming up. By the way, the earnings season is going to be starting very soon. So we also have to prepare for the earnings coming up for a lot of companies. Right now, it's kind of like towards the back half of Q2 earnings, Q2 earnings is kind of dying down. And now Q3 earnings are going to be starting very soon in October and November. So that is going to be super important. Make sure that you guys are ready for that as well, because there's going to be a lot of movement with that, with relation to, of course, the tapering announcement, the interest rate, the inflation, and all those different things. So All right, let's take a look at Takati, your take on Moderna, Novavax, and BioNTech. Crazy sell off due to the Merck pill, even though pill is for people in hospital, unlike vaccines. So I can't speak for the actual pill and what it does and the benefits or pros and cons of that. But what I can do is, kind of go over the pattern for Moderna. And BioNTech. I mean, these companies have been really, really volatile. There's been a lot of volatility for them. They've been going up 100% in just a matter of like weeks here. So 136% since middle of July till August 10. So like just in 4 weeks, this was up over 136%. So, definitely a strong rally. And then we saw in 2 days, this stock come down 30%. So the volatility is incredibly high for BioNTech. The last time I checked, the valuations were reasonable for both of them. They've actually come down to 14 times earnings and 7 times sales. But the support level that we talked about in that previous video was roughly at this $254 level, right? So this right here is a support level, the green line you guys see on the chart. And the buyers stepped in. I mean, we were only down over 6% on Friday, as opposed to being down over 14% intraday. We come down to $230 before pushing higher. So this previous resistance certainly acting as a support here, but if for any reason we see some more downside, $200 is going to be that next support level, kind of aligned with that 200 simple moving average and the higher lows right there for the company. So that is still the ascending pattern, or the higher highs and higher lows, and obviously we broke down below that descending triangle. So I mean, it got to a point where it was very, very overbought here, with the RSI trading at well over 92. RSI 92 is like extremely overbought levels, and of course the price also broke out from this ascending pattern, and since then we've just been consolidating sideways, and then took us a couple catalysts to break down below that descending triangle and that 50 EMA as well. So watch $200 as that next support, $200 to $205, kind of aligned with that 200 simple moving average for the company. And same thing for Moderna as well, although it does not have a support, maybe the 100 SMA. So let's see. So that's the 300, that's the 100. So $307 is where we're sitting for that 100 simple moving average. So we'll keep a close eye at that. Just want to make sure that that is the 100. Yep. So we'll keep a close eye at that perfectly at the 100 SMA, $307 a share. It's kind of hard to judge the momentum right now. For right now, the resistance is going to stay put at $382 a share right there. That 50 EMA is now going to start acting as a resistance. So Moderna might fill the gap, it looks like. Yeah, I mean, it could. There's a small gap here. Right there, we could. But again, that resistance is going to stay put at that 50 EMA for the company. All right, so let's see. So, all right, what stocks are we looking at other than these? MELI, so Mcardle Libre has definitely, rallied after this inverse head and shoulders. So we got like a left shoulder, a head, and a right shoulder. We got that breakout, and now we're perfectly sitting above that support of 1630, 1629 levels. So this green line that you have on the chart, previous neckline from this inverse head and shoulder is now acting as a potential support right alongside its 200 simple moving average and that 100 SMA as well for the company. So and this could be seen as some type of a massive cup and handle too, could be forming if you were to take into account this right here, kind of like this entire cup, and then we could be on our way to forming some type of a handle. That's on a much like a broader level here, but then inverse head and shoulders also inside the cup and handle. So support levels roughly at 1629, 1630 levels, and the resistance is going to stay put at this 50 EMA in the short term at 1755, aligned with this previous support, previous resistance for the company. All right, Tesla we already went over. Let's take a look at Coinbase. So Coinbase has obviously been selling off as Bitcoin was selling off, but now Bitcoin has actually broken out, right? So we're still struggling at that resistance, 48,500. So that right there is a resistance for the company right there. Previous resistance, actually not the company, but the coin, Bitcoin. So resistance is going to stay put at that level. We're just consolidating sideways for the last 3 days, right? It's just been struggling at that level. But we're trading above our moving averages, so that's good. We're trading above that 200 SMA, that 50 SMA as well. So if we do get another breakout, we are actually breaking out of this downtrending channel as well. Earlier we were making lower highs and lower lows. We saw a retest and then a huge breakout from that. So Coinbase, I do expect to reach as highs of $254, $255 a share. This stock obviously has been very, very volatile. It's been consolidating sideways for the most part. Getting rejected at 300s, validating support at 220s, coming up to 254. So right aligned with that sort of consolidation pattern here. So keeping a close eye at 218, 220. Got a very small position, like literally very, very small position in Coinbase. But $254 is going to be that next resistance to keep in mind for the company. All right, let's take a look at Chewy. So what level are you adding next year on Google? So Google, I will continue to add a dollar cost average. Friday was a strong day for Google, kind of validating that 100 simple moving average and pushed up over 2.4%. So 2770 is going to be that next resistance. But if you do get a retest of 2550, 2500, in my opinion, that would be a great level for me to add more shares of Google at that price point. Because Google, believe it or not, I mean, Google remains a stock that's fairly valued, with a lot of potential for growth in the future, right? So very, very, of course, Google is one of the biggest companies in the world, stable revenues, strong profit margins, and overall just a really, really strong company when it comes to those year-over-year growth rates. So we'll definitely need to kind of build out a bigger position in this. 2550 is going to be that next support level to watch for the company. All right, so which stock were we looking at? Let's see, Chewy. So CHWY. This is a company that I've done a complete fundamental analysis on. So make sure that you watch that video. It's actually going to be in stocks under 30 minutes, and more of those videos are going to be coming out very soon. Now that this big project is off my shoulders. So $64 is going to be that next support level to watch for Chewy. So that right there is the level to watch very closely. Previous support level they validated before rallying over 53%. The valuation, let's see, the valuation remains rich, right? 3,500 times earnings. Let's see what the forward price earnings and price of sales look like for the company. So Chewy, and this is going to be again after the sellout that we've seen for the stock. So we're going to come over to the value side and quickly take a look at this. So price to earnings on a gap adjusted basis, we're at 973. So it's obviously not as bad as 3,500, but it's still pretty high. Enterprise value to EBITDA, we got 141. So we're trading at 141 times EBITDA for the company. Very, very expensive. Price to sales forward, only 3 times. It's actually not bad. Price to cash flow, 94. So also very rich multiple for the company. Just given where the valuation is, this doesn't mean that Chewy is like a terrible company. It's like one of the worst ones. It just means that it's a great company trading at a rich valuation. That's all it means, right? That's simply what it means. And that's another thing. Like I know there's a lot of people that are actually bearish on Tesla. They want the company to fail. But then there's people, they're analysts that have price targets on Tesla, right? That may think the company is great. The company is doing incredibly well. It's got a future, but it's trading at a rich valuation. That's simply what that means when people have price targets on a company. Now again, I can't speak for all, but most of the times when analysts have price targets on specific companies, that's because it's trading at a higher valuation than what they perceive to be fair or undervalued level for that company. So for Chewy, keep a close eye at $64. That next support resistance is going to stay put at $75 right there. We got rejected here before selling off even further. This could be a technical, like a swing trade only, not planning to hold this company for the long term, even though I really like the business model and everything. All the research that I've done, it pointed to a great company, great story, great qualitative aspect, and strong revenue growth as well, and a path to profitability. But the valuation is high. If it comes down, then definitely I would consider it. But right now it's just too rich for me. So Richard, yes. So Lucid Motor also is trading at a very rich valuation at over $39-40 billion market cap, and it's gotten rejected at a $29 level time and time again. It's a triple top resistance here for the company. We've just been getting rejected at that resistance for a long time. So resistance is going to stay put at $29-30, and support is going to be $22.23, like roughly at those moving averages. In terms of the actual valuation, the company is going to start delivering vehicles in October. We have to kind of see what the actual feedback is and how well the deliveries are going, how many cars are they delivering per month, because they're also on the higher end. Their prices are more expensive, like their cars are more expensive than than Tesla's average vehicle price, and of course some of the other EVs as well. So, you know, to expect the company to do like 10,000, 20,000, 30,000 vehicles per month in the beginning is going to be very challenging, right? But over time, you can see that progress. But as I mentioned, the valuation remains rich for the company, just relative to where we are in the business cycle, and with the company that's just getting started, starting to deliver vehicles. 40 billion is a pretty steep price to pay for that company. All right, let's see. Wow, there's not a lot of stocks you guys are talking about today. But Enphase Energy, $150. Feel free to comment any stocks that you want me to go over. You know, we'll do this for like another 5-10 minutes. And I'll break down some more stocks. But $150 is going to be that next support for Enphase, and I'm considering kind of dollar cost average in this company, profitable in the solar space. So we'll definitely will be buying more shares of. Affirm. So Affirm has just been consolidating sideways. There's not a lot to go over, but just a resistance at close to 138, support at $103 a share. So just consolidating sideways. You know, there's not a lot of movement. We already saw big jumps for Affirm. It's almost over 100% here. So $138 is going to be that resistance, support at $103 per share. FTNT, oh man, Fortinet. This is a stock that I certainly would love to have, but this has been on a strong uptrend, and this is one of the things that is very, very important, right? You'll notice that let's just do some Q&A. So what was the pattern earlier for the stock, and how is it different now? Right? I mean, earlier, actually just tell me what type of pattern you guys see now forming for Fortinet. Earlier, it was on a nice, consistent uptrend. It was validating, respecting that 50 EMA. We were just pushing higher. We were just rallying, you know, to new all-time highs. But now, something's changed. Something's different for Fortinet than what we were seeing in the past, right? This right here was the nice uptrend for the company. Nice uptrend, so a lot of buying pressure, pushing higher, higher, higher. And Richard, on point. You're absolutely on point today. Head and shoulders, right? This is a perfect head and shoulder pattern forming for the company with the neckline at 285. So this right here is going to be the neckline for the company. And you can see that there's right here a left shoulder. We got a head and a right shoulder for the company that could, not saying it will, that could potentially break down below 285, right? And this is the difference between having like a uptrending channel here, so we are forming higher highs and higher lows, and now it's starting to move sideways, right? We're not making higher highs and higher lows anymore, but instead we're trading sideways. So, you know, this could be the first signs that the rally is coming to a short end, right? It could be a sign that we're now starting to trade sideways. We're not following the same trend, and we could potentially see a breakdown here below that 285 support level. But watching this stock very closely, I like the fundamentals. I love the company in general, and we'll be looking to kind of buy this stock very soon. So Daniel, Adobe is a great company in my opinion. It's definitely been coming down. It was a long overdue for a correction, for a nice pullback here, and you'll notice that you know, the RSI is coming down to more oversold level. It's pretty much oversold at 25, and the MACD is also sold off aggressively. So definitely very, very oversold. It's come down from 671 down about 15% here. Watching $535 aligned with that 200 SMA to add more to my position here. So Evergrande and half the Hong Kong market is halted. Interesting. Let's take a look at the Hang Seng Index and how that's doing. So down about 30 basis points here for market open. How is BABA doing? Actually, what is that ticker symbol? 9988. All right. So Alibaba. All right. So it's still gonna be opening up because this is delayed. I don't have subscription to the Hong Kong market. So on Friday it was down over 4%. So we'll see where this thing opens up when the market opens. So Nelson, yes, a head and shoulders pattern usually does result in a breakdown below the neckline. So we'll see if that happens once again. Still not open on Bloomberg Terminal. You see halted news all over. Interesting. That is not good. For the U.S. markets also, that's not good. So the Dow futures down about 18 basis points here. We got the NASDAQ futures down about 10. Actually, S&P futures down about 10, and NASDAQ futures down about 6 basis points as well. All right, let's take a look at Ally Bank for Gabrielle. And then we'll just look at a couple more stocks here and then just call it. But Ally Bank seems like decent yield, 2%, stable revenues, trading at 6 times earnings, 1.8 times sales. That's kind of expected from banking stocks, but just consolidating sideways. This is a very similar pattern to Silvergate Capital, right? It was just consolidating sideways, and this right here is going to be the strong range for the company to just watch right now. And support level roughly at $48, $49 a share. So that would be the level to watch, and just consolidation sideways here, a lot of it. Resistance is going to stay put at that $54.50 to $55 level right there. And again, that's going to be aligned with this previous resistance here as well. We're just consolidating sideways in that range. Shoba, yes, so Trade Desk is going to be a stock that I'm watching very closely as well. It's come down, testing some support here at 67, although the valuation, I mean, there's not a stock. I mean, every stock I have to start with a valuation really high because it's trading at 74 times earnings and over 33 times sales. So that's still a very, very rich number. $67 is going to be that next support level, all the way as low as $58.80. So those right there are going to be 2 support levels to watch very closely for Trade Desk, and the resistance is going to stay put at close to $92, $93 a share. This is a potential swing trade opportunity that I will be kind of sending out the alert for in our Discord. So we will continue to monitor this one as well if it does come down to 67 or even breaks down to lows of $58 a share. Nelson, every live you make, I learn something new. That's great. That's awesome. That's the whole point, right? And trust me, for the private live streams that we're going to be doing for Market Open, for all the Patreon members, for all the Discord members, there's going to be a lot of analysis. Like, literally, our goal for every private live stream is to pick one stock from our watch list and go over all the risks for that company, go over all the fundamentals, the growth, and really do a deep dive during these private live streams on every single stock or company that we look to analyze. So it's going to be a lot more detailed. It's going to be a lot more sort of educational that we're going to be doing our private live streams on. And we're going to start off with like once a week, twice a week right now during Market Open. And of course, we'll be sending out the buy and sell alerts during that time. If I'm looking to buy a certain stock, I will just literally just do it on the live streams and then send out the alert for that on the Discord. So there's a lot of things that are coming up in the pipeline, so I hope you guys are excited for it. So that's about it, and we're gonna probably end the live stream there. I think we covered more than 10 stocks, plenty more than 10. So I thank you so much for joining in. I know it took too much of your guys' time, just about 9:30 p.m. Eastern. So hope you guys have a great evening, great night, great afternoon, great day, wherever you guys are watching from. So again, thank you so much for joining in. And of course, the fundamental analysis course is finally out. So if you want to get access to that, the code is going to be early bird for a 25% discount if you wish to join. So it goes over everything that you need to know. Everything that I know is in that course from a fundamental analysis standpoint. Literally everything that I know is in that course. And I will be adding more and more content over time, and more lectures will be included for free. It gives you like a lifetime access as well. So thank you so much for joining in. I really do appreciate you guys' support. As always, happy investing. So yeah, I can actually include like a payment plan as well if that's what you need. I will definitely include a payment plan right after this video. I will go ahead and see if I can include a payment plan for that. So we'll definitely do that. Thank you so much for joining in. Really appreciate you guys. Happy investing, and I will see you guys in the next live stream. Take care.